With that, we're going to get started today. And I am just so excited. We have an incredible session. So our small business webinar series, welcome. You all are here and you're ready to learn. And today's session is planning for profitability. I'm Molly Heffernan, Director of Marketing at the Tory Burch Foundation, and I am here with Melissa Houston, Certified Public Accountant, CPA, the founder of She Means Profit, a podcast and blog that teaches successful small business owners how to increase their profit margins. I think we all love seeing those numbers go up and increase. Melissa is also the author and contributor for Forbes. And Melissa, we are just so excited. You believe so deeply in ensuring that women can grow their wealth, invest, support other women, and just that elevating of financial success for women across the board. So no better person to walk us through planning for profitability today. Just a couple quick housekeeping things before we dive in. After Melissa's presentation today, we are going to have plenty of time for Q&A. So please use the Q&A box for your questions. We don't want to miss them. And that is the best place for your questions to be seen. Use the chat box for all the community building and fun, getting to know each other, maybe celebrating some of what Melissa's saying, the plus ones, the yes, that I heard that, I love that, but the Q&A box so your questions don't get missed. And make sure that you select everyone in the drop-down menu in the chat. And last but not least, today's session is going to be recorded. So fear not, like if you miss something, you can go back and watch, you can catch up. You know, I know that sometimes it's hard, you're feverishly taking notes. Don't worry. You'll have the recording in your inboxes later today, as well as the slides if you need to go back, really sit and look at something. So with all of that, Melissa, I'm going to hand it over to you and you're going to walk us through planning for profitability.
Thank you so much, Molly. I really appreciate it. And I'm looking at all these amazing businesses coming through in the chat, and I am really excited to be here. But before we get started, I'm going to share my screen into present mode. There we go. I think everybody can see that. So welcome to Planning for Profitability, and we're going to have about a 40-minute chat about profit and why it's important for your small business. And I am super excited to be here. I am looking forward to answering all of your questions at the end of the presentation. Before we get started, I do want to mention that the opinions in this webinar is a general blanket statement. If you have specific questions for your business, you need to consult an expert. Not to say I'm not an expert, but you need a one-on-one. Okay, so the plan is we're going to do a quick introduction of myself, and we're going to go through how to avoid common cash pitfalls, which is really common for small businesses, especially those who are product-based businesses. And I know there are many of you who indicated so in the chat. We're going to talk a little bit about financial statements, like the structure of them, but we're really going to get into what's important for you to know so that you can increase your bottom line, because your bottom line is your profit, and profit is how your business succeeds. So let's get started, and I'll just do a quick overview. Molly gave me a great introduction, but I just want to mention that I'm a CPA with over 20 years of experience. I am the author of Cash Confident, which is an entrepreneur's guide to creating a profitable business. This is a book that I released in May. I am a Forbes contributor where I speak to business owners, women entrepreneurs, about personal and business finance. I am a former social worker, so I bring a lot of those skills into my work, because I know that money is also emotional, especially for women. And I'm not all work. I am a bit of play, and I'm a lover of Schitt's Creek. If you have not heard of this TV show, you have to tune in. It is hilarious. And most importantly, I am on a mission to get more wealth into the hands of women business owners, because I feel this is a great way for women to build their wealth through their business. We need more wealth in the hands of women because women do a lot of good with wealth. Wealth does not buy happiness, but I can promise you that wealth buys a lot of opportunity. So if we want to see real change in the world, we've got to get that wealth into the hands of women as well. So let's get into it. I'm going to ask you a few questions. You may resonate with some of these. So if you are making money in your business, but each month you're struggling to make those payments, you're wondering, where did all the cash go in my bank account? Or you know that you need to know your business numbers, but you feel scared or overwhelmed because, like I said, money is emotional and you just don't know where to start. You may feel that you can relate with that. Or you wonder how long your business can go on like this because you know that you're struggling financially, but you can't quite get a grip. Then you are definitely in the right place today. Because at the end of this session, I want you to be able to identify some of the mistakes that you might be making in your business and how you can correct them. And I don't teach people how to be accountants or bookkeepers, but what I do want to focus on is showing you, because you're the business owner, the financial information that you need to know so that you can grow a financial thriving business. Okay. And then we're going to really focus on the three profit drivers, the key profit drivers in your business that are going to help you make more profit in your business. And profit is good because you can take that profit and reinvest it into your business and grow your business without taking out any additional debt for your business. And by the end of the session, you will know what you need to do to get your finances in order. So I want you to ask yourself this question. Why should you care about your business numbers? I know that, being an accountant for over 20 years, I know this is the less glossy or sexy part of your business. And so many business owners really try to avoid this. But I want you to think about what good can come out of this, because accounting has been around for centuries, like forever. So there's a reason why. This is not a shiny object. This is solid and true stuff you need to know. So why should you care about it? And the goal is that you should want to know how to make profitable decisions for your business. When you know your business and your business numbers, you can see how profitable your business can be. And profit is the true power of the business. A lot of people talk about revenue. They talk about bringing in sales. They say, I'm a big 7-8-figure business, whatever. But that does not equal profit. And being in business for over 20 years, being an accountant, I have seen 7, 8, 9-figure businesses go bankrupt because of cash management issues. So revenue does not equal profit. And if there's one thing I want you to take away from today, it's to remember this: profit is key. And as I mentioned, you can go bankrupt even if you're bringing in a ton of revenue. In fact, 82% of businesses go bankrupt due to financial mismanagement. And I know that's a scary statistic, but it's very real. And I want to help reduce that statistic. So let's talk about cash pitfalls. And the number one way to avoid cash pitfalls, I'm having trouble here, is through financial management. Like I said, it may not be the most sexy thing to do in your business, but this is the backbone of your business. When you are managing your finances really well, you will not have any of those financial problems going on, but you'll also know what's going on in your business that's working well for you and what you need to improve on. So there's a lot of advantage in knowing your business numbers. It's not just about reading financial statements. It's about understanding them and understanding the story of your business. Those financial statements are telling you what's going on in your business, and you want to pay attention because numbers just don't lie. So ways a business can fall short on cash, there are two main ways. Is you're either carrying too much debt in your business, or you're not building profit in your business, or a combination of both. So you don't want to be short on cash because cash is queen in your business. Cash keeps the doors open in your business, especially if you're brick and mortar or product-based businesses. You really need to be zeroed in on your cash. Service-based businesses tend to get off the hook a little bit easier, but it's still super important. Like if you're a business where you've got a ton of revenue and low overhead, then you're probably doing really well, but you still need to manage your cash. You need to know what's going on. But when you get into the gritty of the business with product-based businesses, financial obligations, everything like that, you need to have that cash because shortage of cash can close your doors for your business. It's scary, so you want to pay attention. So when we talk about good financial management skills that will help you increase the profit in your business and keep your business financially organized, I created the Cash Confident Framework, which is trademarked. And this is a 5-step framework that goes into what you need to know as a business owner so that you can make money in your business. Excuse me. So my goal here is I really want to support you and help you to make more profit in your business. I want you to manage the money in your business because money mismanagement does cost money as well. I want you to know your numbers so that you can make smart, profitable decisions every day for your business. I also want you to think about your relationship with your bookkeeper and your accountant. Okay, so a common mistake we're going to get into a little bit later is how business owners often rely on that financial information from their bookkeeper or accountant, and it doesn't quite work that way. And I can understand the frustration for a lot of business owners because the lines haven't really been clear for a lot of business owners on what the role is for each type of accountant that you're working with. So we're going to get into that. And I want you to help you get financial freedom because chances are you started your business for freedom. We start our businesses because we're tired of the 9-to-5 grind. We need some flexibility. We want to work for ourselves and we want to make money. And like I said, making a lot of money does not buy happiness, but it buys you a lot of opportunities. And, studies also have suggested it increases your happiness as well. There's a certain level of financial freedom that you need to get to be happy. So nobody likes to be in that stressed out stage in their business where they're just stressed out financially and they're wondering how they're going to pay their bills and stuff. When you've got a plan in place and you know what you want to do and the direction that your business is going in, that relieves so much of the financial stress. And it makes you financially empowered and it helps you understand your business really, really well. Excuse me. So I am a true believer that every business owner has the power to create wealth for themselves through their business. And it really is as simple as good financial management skills in your business and your personal life as well. So you want to make sure that you're not just looking at your business finances, you are taking care of your personal finances as well. Okay, now we're going to get into the meat of it. The common mistakes that I see, and these are not all of them, these are just the most common ones I'm seeing, is emotions are getting in the way. So what this means is that I've mentioned that money is emotional, especially for us women, where we feel, and it's men too, but for us as well, we feel that our success is tied to how much money we're making, how much revenue is coming in the door. You can see how this gets very emotional. Your worth is tied to your net worth and all sorts of different stuff that we're telling ourselves. But really, money and financial reports are just that. They're a tool to get you where you want to go. So you have to start taking the emotion out of it. There's a lot of fear and embarrassment when it's time to look at your finances in your business or even in your personal life. And you need to overcome that fear and start looking at it because the more you sweep it under the rug, the worse the problem is going to build up, right? So take care of the emotions, take care of the mindset when it comes to your finances. Another big mistake I see, and I don't blame anybody for believing this because this is what so many business coaches out there put out there. It's you just need to make more sales. If you are low on cash, make an offer, put out your sales, bring in that money. And sure, this might cure your situation for maybe a week or two. It's a Band-Aid solution, right? You need to know what's going on under the sales numbers because if you're making sales and you have a really low profit margin on those sales, but you're not even aware of that, you're going to see that you're just basically, running on that hamster wheel. If you're not making enough profit in your sales, you're not going to get yourself out of the hole that you're in. So that's another reason to really pay attention to your numbers. Another problem I see is you're not paying yourself regularly. And this is, you have to pay yourself first. This is mandatory because the reason you built this business is so that it can support you financially. So make sure that you're paying yourself enough to pay your personal expenses. And you have to include that in your financial plan, which we're going to cover in a minute. I know it sounds very naive for me to say, make sure you pay yourself because I know the struggle, especially at the beginning. It can be very hard to pay yourself when you're barely making enough to pay all your financial obligations. But you do have to make this a priority and you do have to plan this into your business financial plan. Otherwise, you'll never see a check for yourself, right? And that is a really hard business to have. And then the mistake, you think your bookkeeper or accountant is taking care of you. So the bookkeeper is there to do the data entry, build the financial foundation of your business, keep your record keeping and your bookkeeping in order. And you want to make sure that you invest in a really good bookkeeper, because your financial reports are based on what this person is entering. So a lot of business owners feel frustrated because they're like, why is my bookkeeper not helping me and telling me what I need to do in my business? Like, why is she not explaining to me the financials? And on the other side, you likely have your tax accountant, where you bring your books to and you get your tax return tax return completed every year. And you're wondering why they're not giving you any financial information. And the reality of it is that they're engaged into doing your taxes, not necessarily giving you any financial guidance or any thoughts on how you can improve your business. You have to look at the engagement letter. The engagement letter will tell you what your expectations are from your tax accountant. And then, there's a middleman where there's like a CFO person. So if you have the luxury to be able to afford a full-time CFO person on your payroll, that's fantastic. And your CFO can help you, but you need to have that relationship with them and understand the conversation that's going back and forth about the finances. Now, a lot of startups can't afford a CFO to have that daily guidance there. So this is why I talk so much about business financial literacy first, so that you can understand yourself what you need to do for keeping your business finances intact. And secondly, if you do have a fractional CFO, which is essentially a part-time CFO, or you get on your way to getting a full-time CFO, then you can have meaningful and valuable conversations with these people so that you understand what they're advising you to do. So that's really important to understand what the different roles are for different accountants. Okay, so I introduced to you the Cash Confident Framework, and this is really important. We're not going to cover every step because we don't have enough time, but I want to get into step 3, which is the media step of the Cash Confident Framework. And what that is it's building like your financial foundation and using that information to your advantage, right? So the purpose of having a strong financial foundation is so that you can make smart financial decisions off this information, right? So you have to have a good bookkeeper that ensures your reports are accurate each and every month. You need to be sent these reports, or you can run them yourself and look at your income statement and your balance sheet and understand what's going on in your business. You need to look or use good accounting software. And I know this seems really basic to separate your business finances from your personal finances, but I have met many business owners who have not yet done that. So if you have not done that, make sure you do so. Okay, let's look at financial reports. Now, there are 3 financial reports that you typically will use in your business. The first one is your balance sheet. And your balance sheet is typically showing you, it's equity driven. So it's showing you what the difference is between everything that you own in your business. So we have assets. So it's everything that you own versus everything that you owe. So any liabilities. So the difference between your assets less your liabilities is your equity. And essentially what your equity is if you had to liquidate your business, that's how much cash you would get in the door. Like if you decided to shut down your business, that's what's going on. So you always want to make sure that your equity is positive. Negative equity means that you owe more than you own, and that means your business is really not worth anything. So the balance sheet is something that you don't look at, or you should look at every month, but you don't use often or as often as you would for your income statement. And some of you may recognize this as a profit and loss statement. Either way you call it, it's the same thing. Now, your income statement is profit driven. Okay. So what your income statement does is it looks at the revenue, shows your expenses, and then the difference between the revenue and the expenses is what your profit is. We're going to get into that deeper. Your income statement is going to be the financial statement that you use the most. So much of your activity in your business is based on that income statement. So if you're not familiar with the income statement, I highly recommend that you start getting familiar with it now and look at it daily or weekly or monthly, but make sure that you're looking at it and you understand that information that your income statement is telling you. And then the third one is your statement of cash flow. This one is not used nearly as much. I don't really use it in my business. It comes as your third statement in your financial reporting. That's used mostly for when you're selling your business and people want to see what your business is worth. They use the statement of cash flow to evaluate it. It's very different from cash forecasting. And I highly recommend business owners are keeping track of their cash management. And that is a different statement that you would be using. So it's not to say that cash flow is not important to monitor. It just means the statement of cash flow is not typically where we get that information from. It's a different statement. Okay, so now we're going to look at the income statement. And the income statement is broken into 3 sections. So first, you're going to see that you've got your revenue. Revenue is always listed at the top. So any sales that you have coming in, and you can see that your income statement is year 1, year 2, year 3. You can run your income statement monthly, quarterly, annually. It's up to you, but you just make sure that you understand that when you're running your income statement, you understand that it's for a certain time period. So let's say, you want to run your income statement for November because November likely has been closed. You know, you're done with November. You've got your sales and your expenses entered into your accounting software. You would run your income statement from November 1st to November 30th, and whatever you earned in November and all the expenses that were incurred in November are going to be spat out in this income statement. And then you would understand how much profit you made that month. Okay. So your income statement is revenue, less expenses, and your cost of goods sold are part of your expenses. So, I'll just touch on this briefly. A lot of product-based businesses monitor their cost of goods sold, and that is part of how much it costs to create your product. And then you've got your overhead expenses here. So all of these expenses are totaled up into your total operating expenses. So you can see in this example, there was $74,000 of sales made and $30,750 of expenses incurred. I don't know if this was for the year, I think. Anyways, so what that means is they have an operating profit of $24,250. So if they were losing money, that number would be negative. Okay. We're going to, kind of ignore this stuff here for today's purposes, but essentially this is like transactional stuff that needs to come off your statement. But it's important to understand your revenue less your expenses is your profit. And you want to see profit, and you want to have your profit margins up to what you're benchmarked in your industry. So if you are selling, let's say candles are typically a net profit margin of 30% for your business. So you want to ensure that you are being competitive and your business is running at a net profit margin of 30%. Maybe that's not going to happen each month, but you want that carrying average net profit margin of 30% over the year. So I know that's a lot to cover, but if you have questions, we'll definitely hit them in the Q&A section. 3 profit drivers that I want you to focus on. Okay, this is really where you're going to understand how your business creates profit. So there's 3 ways. First, your pricing. So you want to make sure we're going to get into each topic separately, but you have to make sure that you've priced your products profitably. The second one is your sales volume. Okay, so you need to make sure that you're selling enough. You need to know what your break-even points are for sales and what your net profit margin breakthrough points are to get to that, for example, that 30% profit margin. And then the third one is expenses. You want to make sure that you're managing your expenses so that you're not exceeding any revenue numbers that are coming in and you're not operating at a loss. So let's get into pricing. And I know I'm going quick, but I want to make sure that we have time for questions. So I keep checking my time here. Okay, your pricing needs to be reviewed at a minimum of an annual basis. So if you are a business owner and you have not looked at your pricing in over a year, it is absolutely imperative that you do so. And because we're in such high inflationary periods right now, you can do it more than annually because everybody's prices are going up. We have seen such a strain on inflation, and you need to make sure that you are operating a profitable business. So your pricing is going to be one of the first things that I want you to look at. You need to ensure that your pricing is competitive. You don't want to outbid your competitors or undercut them, but you also want to make sure that you're remaining profitable. So there is an exercise that you can do to calculate that. If you haven't done so, you need to start doing that to ensure that you're not wasting your time by selling products that are not bringing in any money for you. So make sure you calculate your price and be aware of the psychology of pricing, right? Every business owner, I can guarantee you, absolutely every business owner that I've been through this exercise with, of when it's time to increase their price, it's a panic. It is like, oh, if I increase my price, I'm going to lose all my clients. Nobody's going to pay more, and that is a natural reaction. And that goes back to your letting your emotions get in the way, right? Price increases, unfortunately, does mean that some of your clients are going to have to leave, but new clients can replace them. And you need to be cognizant of this. It does not mean the end of the world. It just means that when you're going through a price increase, you need to be paying attention to your numbers so that you are aware of how many clients you've lost and how many you need to bring in to cover that lost revenue that's coming in. And you need to understand, if you're selling more than one product or service, you need to understand which is the most profitable, because people often mistake their best-selling product as being the most profitable product that they have. And it doesn't work that way. So what I mean is, if you have, I'm just trying to think, like, I'm just going to pull out examples. So if you have a candle that you sell for $60 a unit, and maybe that's your best seller, but you're only making $10 of gross margin on this, gross profit on this candle, and then you're selling a necklace and you sell that for $150 and your gross profit on that necklace is $50, but you're selling more of your candles than you are the necklace, because you think that because everybody wants to buy the candle, you put all your advertising costs behind this candle. If you changed it and put more advertising behind your necklace and got those numbers up, that would increase your profit line significantly. So a lot of business owners aren't even aware of how much profit they're making on each of the products that they're selling. So be aware of that, because that alone can help you make a super smart financial change in your business. Sales volume. Sales volume is also very important. If you've raised your price and you're thinking, I still need to make more money to generate the profit that I want, you need to look at your sales volume. And what that means is, do you know how much you need to sell each month to break even? Do you know how much you need to sell each month to get to that net profit margin point that you need? Do you, are you putting your marketing efforts behind, selling? Like, what's going on with your selling? How are you going to increase your sales volume? It's, there's so many questions you can ask about your sales volume, but you have to make sure that if you need to make the money that you need to make in order to break even and generate a profit. So knowing how much you need to sell gives you direction, focus, and goals for your business. Each month, if you know, okay, I need to sell 100 necklaces to get to that 30% profit margin that I want for my business, that's what you focus on. You focus on getting to that 100 sales in order to reach your goals, and you monitor your progress against those sales, right? Monitor your sales numbers each and every week. Know how much you need to keep selling in order to reach your goals. And if you exceed those goals, that's fantastic. It just means that there's more revenue coming in. So here's a good time to stop and tell you a story about Megan. Okay, I worked with Megan, and she came to me. She was running a nanny business, and she always focused on the nanny services, right? That's what she felt her agency was all about. So when we started working together, she knew that she had to raise wages, and she knew she was going to lose a lot of her clients because of this. And, you know, it was during the pandemic and the economics strain that has been going on for everybody. And, you know, like just whatever's going on in the market, she knew this was not going to be a good thing. So when we looked at her numbers, we realized she wasn't focusing her energy on what was giving her the biggest profit margin, right? And there were services that she could be offering and have a profit margin of like 80% on these services, but she wasn't focused on them because she felt that her business was more about nanny services. But when I pointed this out to her, she's like, that's crazy, because that's what I enjoy doing the most, is by selling these other services that are making more money for me. So just by making that switch and start, like, she didn't let go of her nanny business, but she also focused on selling more of that higher profit making product or service in this case, then she increased her net profit margins. She went from breaking even barely, sometimes losing money each month, to having a net profit margin of, eventually she got up to 30%. So she's $1 million business. Now she's more than that. But when she started seeing me, she was $1 million business, breaking even. And to hit a 30% profit margin, that means that she was making profit of $300,000. So that's a big difference, going from barely breaking even and being all stressed out financially to making $300,000 in a year. Now she makes more, and her financial stress has dissipated just by doing that one small change. We did many changes, but that one small change can bring in such fruitfulness in your business. So let's say that you've looked at your pricing and you've looked at your sales volume and you're like, I still need to change something in my business to make more profit. You need to look at your expenses. Okay. Your expenses, if you're still struggling to get to that profit margin that you want to get to, you may need to decrease your expenses. So you need to know what's working for you, what's not working for you. There's different ways that you can negotiate terms with suppliers. You can buy in bulk. Those are like some cost cutting measures that you can take, or you can, you know, look at your advertising budget and see, like, if you know your numbers for advertising, your sales, your marketing, all those numbers, which I love my business owners to focus on as well, because that's part of knowing your business numbers. Then you'll understand if your advertising costs are paying off or not. Because if you're paying like $100,000 in advertising, but you're not getting the reward of it, then that really is a wasted expense. So you either need to tweak your messaging, or you need to cut back on your advertising expenses if it's just not working. So there's a lot of things going on in your business. When you know about them, you can make smart decisions. So I want you to remember from this conversation that there are the 3 profit drivers of your business. If you're looking at your business and saying, I need to change something in my business, the easiest and 3 top things I want you to go to is looking at your pricing strategy, look at your expenses, and look at your sales volume. All of these 3 things play in together. So it goes back to, I think I have the income statement next. Yes. So it goes back to the income statement. Okay. So if you're looking at your income statement and you're like, wait a minute, that 23,250, I need to get it higher because that's my goal, then you need to look at your pricing. If you can't change your pricing, look at your sales volume, find ways to increase your sales volume profitably. Because if you're spending $100,000 into advertising and you're only getting $100,000 in sales, then that's not the best use of your money, right? You don't want to just break even. You want to make more money. So knowing your numbers is going to help you make those decisions. And then the third is, if you still need to find, like, there's nowhere to squeeze it out of your expenses, reduce your expenses, look and say, well, wages. This is often one of the most expensive line items in a business. And unfortunately, tough decisions do have to be made. So if you are paying somebody who you don't necessarily need on your payroll, you need to make those tough decisions. Or advertising, which I talked about. Maybe rent. Maybe you have to make the just tough decision. Like, I'm paying, $10,000 in rent when I could be paying $2,000 in rent a month. Am I to move? Can I negotiate with my landlord? Is there anything I can do there? Just office supply. There's so many different ways that you can reduce expenses in your business when you know how much you're paying each month. So again, it all comes down to the cash confident framework. So when I'll just go through it quickly, because as a business owner, you need these 5 steps all working together so that you can run your business with financial confidence and get that profit going in your business. And the first step is your money mindset. This is really important. We did not touch on this much, but your money mindset can make or break you as a business owner. So if you feel like you're having trouble with your money mindset, you may want to focus on that first, because what's going on in your business is 80% mindset and 20% skill. Now, the second step is understanding your financial statements. So if you're not understanding your P&L and your balance sheet, you need to start reviewing those, looking at them, asking questions, understanding what's going on in your business. The third step is creating your budget. So we talked about that a bit, where we're looking at, your budget is actually, I don't think we did talk about that. Well, essentially what you want to do is create a financial plan for your business for the year coming out, right? You want to make sure that you're looking at where you are currently and how you want to build your business for the next 12 months and keeping that profit growth in mind. So your sales growth, your profit growth, and any expenses that increase, because as your sales volume increases, your expenses are going to increase too. So having that plan mapped out is super helpful for your business. And then the fourth step is, great, you've got this financial plan that you made. Now you have to monitor your results each and every month. So let's say for November, you had a plan. You need to look at what you planned and where you actually came in, see what the difference is, and know if there was any problems, like if you fell short of your sales goals or if you exceeded your expenses, or a combination of both. You need to know what's going on in there so you can make the changes. You don't want to wait 6 months to look at your bank statement or your financial statements and say, oh, wow, I should have changed that 6 months ago. And because I didn't, I lost $10,000. This happens all the time. So know your numbers. And then the fifth step is a cash plan, and having a cash plan and monitoring your cash management system is important, because cash is queen in a business and you want to make sure that you never run out of money. So that is the 5 steps briefly in the cash confident framework. So, oh, wait a minute. We didn't talk about it because it's here. I apologize. I don't know if you just saw my screen. I just lost my screen because a call came in. Hang on a second.
We can see your slide.
Okay. So your business financial plan. So what you're going to do is, this is a plan that you do every single year at minimum, right? You're going to look at your pricing when you're doing your business financial plan. This is why it's really good that we're talking about this in December, because likely you've got your new year starting in January and you want to start with a business financial plan, because that gives you a roadmap to what you want to do for the next year. So you review your pricing, make sure that it's profitable. You plan out your revenue that you want to earn for the next 12 months. You plan out your expenses. And if you're increasing your revenue over that next year, you're also going to plan out the increased expenses that go with it. And you include your pay in your budget, right? You want to make sure that you have included how to pay yourself. And then you're going to monitor your net profit margin each and every month to ensure that you're staying on track for the year. Okay, so by creating a business plan, Sharon was able to plan out the next year and make profit in her business. It wasn't just like, I'm going to make 30 grand in profit or whatever it is that she chose. Because she had a plan, she stayed on target. Her profit margins increased, and she feels so much more confident as a business owner, because when you're looking at your business numbers, it helps you understand what's going on and how your business is making money. So quick recap here, because I know we're running out of time. 1:43, I'm like almost bang on. That's awesome. So we talked about avoiding cash pitfalls, which cash is queen in the business. You never want to run short of cash. We talked about the key financial statement, which is the profit and loss statement. Balance sheet matters too, but you want to focus on that profit and loss statement to start out so that you understand the profit that you're building in your business. And then the 3 profit drivers of your business, which is pricing, sales volume, and expenses. So having these 3 things will get you on your way to good financial management in your business. So if you're tired of losing money each month, or not knowing where your money is going, or stressing out, because we all stress out at some point about our finances. And if you're tired of struggling to pay yourself and not knowing what to save for taxes, because it's great to talk about profit, but profit is taxable, and you do not want to get dinged on your taxes and not have the cash saved to pay your tax bill. So knowing your numbers also helps you stay out of trouble with the IRS. So knowing all this will help you avoid struggling with your finances, avoid struggling with all that. So what you need to do is you need to increase your profit margin and manage your cash to keep your business happy. So stop leaving money on the table, because when you're not looking at your numbers, you could be losing thousands of dollars if you don't, because it's like, if you don't know what's going on, you don't know what's going on. So you can't stop it. So get to know your numbers so you can stop these money leaks. And if you're wondering about ways to work with me, I do have a couple of services that I offer. So monthly bookkeeping services, fractional CFO services I offer as well. I have courses and program, and of course I've got the Cash Confident book that you can order, and that's a really cost-effective, great introduction to knowing how to manage your business finances. So now you guys have the floor. I'm so excited to answer any questions that you may have.
And I love that Annabelle just dropped in the chat to everyone that she just bought your book. So on
Awesome.
it.
Oh, that's fantastic. Thank you.
So I want to start with a question that I think ties back to something you mentioned at the very beginning. And you said, and I agree, we hear this a lot, that founders have yet to separate their personal finances and their business finances. And could you just go a little deeper on, one, why that is super important,
Absolutely,
the benefits, and a good first step?
Yeah. So it's super important because as a business owner, you are now responsible to the IRS, and the IRS can come in and audit you at any time. If they don't see a clean audit trail, which means that all your business expenses are laid out in a business account and they're overlapping with your personal account, and if you can't prove that they are in fact business expenses, they may disallow your business expenses. So then what that means is, let me just put it in some simple terms. If you've got $1,000 of revenue and your business expense that they disallowed was $500, then you have to pay an extra tax on that $500 that they disallowed. So it's in your best financial interest to keep your books clean, keep them completely separate from your personal finances. Don't let them get mixed up, because it happens all the time to business owners. It's a really good way of losing money if you don't have a separate bank account for your business.
Amazing. Well, I'm glad we started there and are able to help anyone who might be sitting, listening, and in that situation.
Exactly. And it's so common, even for people who've been in business for a few years. They're like, what? I didn't know that. It's like, yeah, you need to know that.
So true. So you had the income statement up on screen and talked about cost of goods sold, and that being a section that a lot of product-based businesses are going to use. But for a lot of the services on today, how should they be thinking about the cost of what they're producing? Say it's education content, or they're producing some kind of consulting end product. Like, is there a cost of good, so to speak?
Absolutely. And that's such a good question. Okay. So what happens in product-based businesses is they have cost of goods sold. Service-based businesses, they have cost of sales. So just to respect time, I'm not going to go into deep about it, but for service-based businesses, if you have a cost of sale, like say, for example, you are offering bookkeeping services, and you have a bookkeeper who actually does this work for you, it's a labor cost, then that goes under cost of sales. It's still treated like cost of goods sold, but it's just labeled as cost of sales. So service-based businesses can either keep it all under expenses, or they can break it out and use cost of sales. But essentially, as long as you're capturing that expense somewhere in your income statement, you're all good.
Great. Okay, you mentioned when working with a financial professional to also be able to run your own reports and get under the hood yourself. And somebody even very vulnerably and kindly shared in the chat that they had a bad experience in which they weren't monitoring and working with their financial professional in their business and got taken a bit advantage of a bit.
Yeah.
So are there tools that you like? And for somebody who is a total, beginner at some of these reports, like ways to just kind of get familiar and get comfortable enough so that you're not going to the mechanic without knowing enough to have the conversation.
Absolutely. Okay. So first of all, I want to say thank you for sharing that. And yes, it's unfortunate that happens. Unfortunately, it happens more than people realize. So that's another reason why I'm always talking about business financial literacy, because nobody's going to care about your business as much as you do. And you never want to give your financial power away. So knowing your business numbers and knowing what's going on in your business is going to help you not being taken advantage of, because sadly there are people in this world who will do that. Secondly, I am a huge user of QuickBooks. I love QuickBooks. QuickBooks is an accounting software that can grow with you, and it also gives you all the reports that you need. So if you're a small business, there's like a tier 1 you can use, and as your business grows, the plan can grow with you. So you don't have to be switching softwares throughout the life cycle of your business. And then thirdly, to get more confident with your numbers, I put out my book. I have the She Means Profit blog where there's hundreds of articles on things that you need to know about for your business finances. There's the She Means Profit podcast. And I know I'm plugging myself a lot here, but the sad thing is there's not a lot of women or even men that are talking about these things, because it's the less glamorous part. People don't want to hear about it, whatever the reasons are, I don't know. But there are a ton of resources. Go on YouTube. If you want to learn how to use QuickBooks software, there are tons of really great tutorials through QuickBooks for beginners. So there's a ton of resources that are available for you. Just be careful. Make sure that you're following professionals, because you don't want to be following bad financial advice.
What I love too about everything that you just said, QuickBooks, they have the entry level pricing, but then also a lot of the resources you mentioned are also free, available to the public. You have a little bit of a sense of vetting and literacy to what you look at, but this doesn't have to be something that's inflating your business expenses as you try and get good at
exactly
knowing this all.
Exactly.
We have a lot more questions, Melissa. So
awesome.
You mentioned the 30% margins in the candle space, and it's a lot of questions about how to understand the net profit margin for my specific industry. Mary Beth's in fashion. She wants to know. There are several other people who wanted to know. So is there like a resource?
Well, Google is a great resource. Okay. You're going to have to know what your benchmark is for your industry. Right now, I can tell you restaurants and bakeries and such are typically at the lower end of profit, where they make 8 to 12% net profit margin. And then professional services, they can make anywhere from like 50 to 80% net profit margin, right? So they're the higher ones. So it depends on your industry, and you have to just benchmark what's going on in your industry. So Google your industry, see if you can get any information off Google. And then what I typically tell people is aim for 30%, because that is usually like the standard throughout industries, unless you're bakery and a high, professional service. Does that help?
That is super helpful. And I think lends itself next to this question that Emily asked about you mentioned a pricing equation. So you want to have your net profit margins, but what is the pricing equation? How should everybody think about pricing their product or their services?
Yeah, pricing equations get a little different for different businesses. But essentially, you have, let's say your product is candles. I love using candles. So knowing what goes in, like all the expenses that go into making that candle. So that means, your wick, the jars, the labels, the lids, the whatever, right? So the physical cost of building that product, but you also have to count the labor even if you're doing it yourself, because you don't want to be doing candles the rest of your life. You want to hire somebody who's going to do that for you when you're in that position. So if you were hiring somebody, how much would you pay them? Even if you're doing it yourself, include that labor into how much it costs to make that candle. And then, so you would take, like, if it takes you an hour and you would hire this person at $15 an hour, then it's $15 a candle, right? That sounds very simple, but you know what I mean. And then you're also going to look at shipping costs. So if you're e-commerce, you also need to include how much does it cost to ship out. So anything that goes into physically making that product and selling it and delivering it is, sorry, not selling it, but delivering it is a direct cost to your product. Because when you look at advertising and overhead expenses and stuff, that's all overhead. You calculate that in your net profit margin. This is your gross profit margin. Your gross profit margin is focusing on all the things that directly go into making this candle. And then, so let's say you sell your candle at $60, but it costs you $20 to make it and ship it. So you're actually making a gross profit of $40 on it. So that's explained very simply, but I hope that helps.
Definitely does. And I guess it sparks the question of, where do you factor in returns in all of that? Are those factored into the cost per good, or is that in some of those overhead?
That is going to be factored into, like, your cost of goods sold. So what you're doing, pricing, you're just focusing on what it costs you to make it, hoping that it will not get returned. And then under cost of goods sold, your returns can be put there, or they can be put in the expense line, no matter where, as long as it's getting captured. But you don't typically include the cost of return because that hasn't happened. Like, you're making the price in the hopes that everything will run smoothly.
Get it out the door.
Yeah, get it out the door, get it profitable. Like, let's say, I know for jewelry businesses, you want an 80% gross profit margin. So I know that for certain. So you want to make sure, so for every $100 you charge, you're making $80 on that jewelry piece, right? So then returns and whatever else, it gets taken off your overhead costs, but that just gets a little bit more complicated.
And I think everybody in all your different spaces are going to have different factors and things to consider. And so that is part of why working with a professional to help you with some of this is really beneficial to a small business.
Yeah.
What are, I guess, since we're talking about pricing, some of the mistakes you see people make around pricing out their product?
This may be a little controversial, but I love to say this because it's so true. Pricing your products too low. And the reason I say this is I really want you to think about the kind of client or customer that you want to attract, because people who are looking for bargains aren't necessarily the best customers to have. And that's where the controversial point comes in, right? So you have to look at the goals of your business versus how you price. So if you want to have the image of being a premium custom experience type of business, you have to outprice your clients and follow up with the value of that product. If you want to be, like, I don't know, like the run of the mill, like everybody just wants a candle, but they like your business and they come for it, then, middle mark. If you want to be a bargain seller, you have to go low, but you also have to be careful. I'm not a big fan of bargain selling, not a big fan of it at all, for various reasons.
Well, everything you were talking about just lends itself to a question that Mary Beth asked, which is just your overall point of view on running sales, and sort of how to navigate that. There's obviously lots of work, especially at the holidays, in a very big sale environment. And so what is your advice typically like to clients on how to even strategically think about sales seasons?
Yeah. So if you want to be strategic, you want to increase your sales, you need to look at how profitable it is. I mean, I know that a lot of people love to discount 20%. That seems to be the common. So look at your numbers. Can your business absorb that 20%? And remember that you have to, like, when you're doing your break even and your net profit margin analysis, and, like other times of the year, exactly what you need to sell in order to hit your net profit margin total. Redo the exercise at selling at 20% off and see how many units you need to sell in order to hit that that financial goal that you have. So it's totally okay to discount as long as you know how much you need to sell to make up that discount for that month. So like November is a huge month. So when you're thinking about November next year, think about, okay, so I know that in October I need to sell this much to break even, but November, if I'm going to discount by 20%, I'm going to need to sell, I'd like to say it's 20% more than what you usually sell. But do the math so that you know for sure, because I just spoke off the top of my head and I'm an accountant that needs a calculator.
Love it. I'm going to sneak one last question in here because you talked about planning your budgets for the year. And I know we've all been through like hell and back the past few years between a global pandemic, obviously the economy, supply chain issues. So how in planning the annual budget should founders think about the uncertainty? Like, is that a contingency? Like, what are we doing?
Such a good question. And that's why you monitor your results to what you planned each and every month. And, you know, your financial plan, if you create it in January and by June, you're like, this is not going at all what I expected. It doesn't mean that your financial plan is in concrete, right? What you do is you go back and you reassess what's going on and you redo your plan. But having those goals, knowing what you need to know in order to make it through the recession or what have you, is what's going to help you make it through the recession. You know what I mean? Like the best, and this is the best plan you can make, especially during recessions, is financial management. Knowing what's coming down the pipeline and being prepared for it is the best plan that you can do to get yourself through a recession. I know it's scary. I know that there's a lot going on in the world right now, and we have no idea when this is going to end. So give yourself some reassurance, make that plan, and do the best you can to achieve your goals, and measure each month so that if you're coming short on sales or if you're exceeding your expenses or whatever's going on, you know it and you know to stop it so that it doesn't continue for the next several months.
Well, and I think, Melissa, it goes back to if anyone is really scared about doing that, to your very first point in the framework about like getting comfortable with all of this. We could go on all day, and I'm so cognizant of time and how your time and everybody who's tuned in. So I'm going to give you a big thank you. I know that we all learned a lot today from you and are so grateful for your time. And before everybody